Yeah, good morning, everyone. Sorry for the 3 minutes delay. Uh, Something happened to my Wi-Fi connection here in Dallas. My name is Rashmi Shah. Uh, Thanks for joining this Saturday morning. Mm, Today, I'm going to talk about, give you update on the market, what's happening in the market, and then I'm going to talk on uh, the thematic fund called healthcare in India, correct? Now, just a disclaimer that this event is for people residing in India and who are Indian residents and who are investing in India through Simplicity, and people who want to participate in the financial markets from India, correct? This is not for investors in North America. Mm, yeah, okay. Now, at the end of the presentation, I'll be taking your questions, but feel free to add the questions on the text message on the YouTube channel. Mm, yeah. So 2020 was the year where the entire world changed, correct? Everyone, every person, every human being, every business, every government, every institution got tested, huh? Tested not for coronavirus, but tested for the way they live, the way they work, the what they do, and the service they provide. And we had to all reset our life goals and change our thinking, and that's 2020. Right, the same thing has happened about the investments in the financial markets. The same thing, the entire financial markets, mm, all the investment options, everything had to be relooked and reevaluated. So from that perspective, I'm going to talk about it today, uh, and I hope you find it interesting. I'll try to make it more interesting and try to give you a different perspective from here, correct? Now, before I let's take a update on the financial markets. What's happening in the financial market now? COVID-19. There was a lot of volatility in the month of February and March, and since March the markets have recovered and markets, but the number of coronavirus cases are going up, and the stock market also keeps going up. So people say, hey, what's going on the main street? People are suffering, my business is suffering, people are dying, hospitals are not able to cope up, government is not able to cope up, and how come the stock market is going up? That's what the question people in America, India, everywhere asking. And many people who were pessimistic on the market got very badly burned uh, because they didn't participate and they sold all the investments, and they were against the market. Now, whether it was right or wrong, uh, time will only tell, but my guess is they were wrong. So, but let me explain what happened in the market, correct? Where the market is today. So, we had a 52-week high on NSE in February. We started a year with 12,182. February we reached 12,352. March we went down to 7,610. Then on September 18 we hit, that is yesterday, we were at 11,504. We have still not recovered from the 52-week high. We are minus 7%. Then from 52-week high to 52-week low, we went minus 38. And from 52-week low, from this low, we have gone to 51% high. So the market has gone 51% high from March low, correct? At the same time, from the beginning of the year, we are still minus 6. So if you take from the beginning, January 1st till today, we are getting minus 6. But from March low, we are plus 51%. So year-to-date return is minus 6. But NASDAQ has recovered way sharply. It has gone to 53% up. From January, it's crossed even 52-week high. It has gone 21% high than the February. So it has breached the previous high. The rupee has depreciated by 3%. So NASDAQ has given us plus 24% return. And Nifty has given minus 6, correct? So there's a rounding of error. So it's minus 29. Underperformance by India's market. But the last event I did on 4th of September, that time India was lagging by 37%. Today, so in last 2 weeks, Nasdaq has corrected more than 22%, and India has corrected or gone up slightly more. And the gap between the two of them has come down by 8%. So India is outperforming the US market in last 2 weeks. That's the short-term trend. The long-term trend, the US is outperforming India. Now, if you see that, the same is the case with S&P 500. Same is the case with Dow Jones. The gap, but both those markets are outperforming India, and even Japanese stock market is outperforming India by 7%. It was outperforming by 13%. So in last 2 weeks, India has outperformed Japan. India has outperformed America. That's the story in last 2 weeks. But the year to date, those two markets have outperformed us. So Indian markets are now catching up the US stock market recovery. That's the basic story, correct? That's the story as of today. Now, you will say, okay, but still the cases are going up in India. Things are so bad. Why the market is going up? Okay, very good question. I'll answer that. I've answered that question last week also, 2 weeks back. I'll answer it again today. Financial markets are always 6 to 9 months ahead of the real economy. So if that is one of the biggest fundamental principles of investing and of the stock market. That's a mega trend which people don't understand. And so this is the real economy. So real economy goes up and goes down. But the stock market, so you see this sector like IT sector, pharma sector, FMG sector is ahead of the market by 6 months, and the old economy stock is behind the market 6 months. That is the performance we are seeing. So when this market is coming down, this is going up, correct? And when this market, so financial markets is always 6 months ahead. They don't look at next quarter, they don't look at next month, they look at what is going to happen after 6 months. What are the prospects of this industry? What are the prospects of this company? And or what are the prospects of Indian economy? And based on that, the markets react. Now, so when in March, COVID happened, the financial market said without IT, the lockdown is not possible. So IT started recovered the first, IT and US stocks. Then pharma recovered. This is a health crisis. We need medicines. So medicines recovered. And we need food. We need, as people eat. So those sectors had a bright future even in the month of March, but they corrected because of the panic and they recovered the first. Whereas the other stocks like airline, hotel, education, there was no clarity, so they didn't recover that fast, and they're still suffering the pain. PSU banks, correct? So market is really behaving in the right way, the way things are going to shape up. But people find it difficult to understand. What happens is, so if I'm living in Pune or in Bombay, I see what is happening in Ghatkopar or Parla. So many cases are there. In Shivaji Nagar, there's so many cases are there. All restaurants are closed. My business is suffering. So I think the market also should go down, correct? And I see only bad things because I'm in a bad mood. I see everything in bad things. But the market doesn't see that way, correct? The whole world market doesn't see that way. And they see after 6 months what is going to happen, and the markets react that way. But so not necessarily, but 99% investors get killed in that. They try to link their personal feelings with the stock market, and they get burned. And that is one of the mega trends which I've witnessed at Simplicity and in India and US. I've seen people doing that, and 90% of our time goes in counseling them. There's a other thing which is up to 2020 has got us, how investments are to be managed. So the COVID is punishing some industries very badly and some industries rewarding very nicely. So there's extreme changes happening, and there's a new norm of investments coming. Anyone who's investing in generic funds like large cap, mid cap, small cap, or balanced funds are getting punished very badly because they are not investing. Those funds, they are doing bottom up approach. They are doing stock picking. They are not focusing on the sectors. They are not focusing on this. And that's the reason what happens. They get caught in the market. Now, so 2020 has brought in more importance to thematic funds. So if your themes are right, you do well, correct? So Simplicity, as you know, focuses only on thematic funds. Now, before I give more explanation on that, see how extreme the market can be, correct? market punishes and rewards to an extreme. Now I'll give you a classic case of these 4 airline companies: Delta, United, American Airlines, and Southwest. These are the 4 largest airlines of US. Without these airlines, the American economy is dead, correct? Because in US, they have 5,000 planes, they have 5,000 flights fly every day from the most of the airports. Now, if these airlines, the total market cap of this airlines is only $61 billion. Only $61 billion. Whereas Uber market cap is $65 billion. Market cap of Apple was on 18th August $2.36 trillion. Now imagine if Apple phones were not, Apple phones came only in 2007. If Apple phones are not there, will world stop? No. We have so many other phones, correct? The world will still function. But if there are no airlines in America, will American economy function? No, it can't function, correct? Medications, there's so many essential things which you need daily flights. Now, if those flights were not there, the economy will come to a standstill. But that market is punished them, 61, and market is rewarding Apple phones. So even one day 5% up and down in Apple price is more than $61 billion. So market is punishing them very badly. Why they are punishing them very badly? Because they see that these companies are going to burn cash for next 2 years, and still they don't see a visibility of when international tourism is going to start, and it requires a lot of capital, a lot of maintenance, and there's a lot of regulatory issues here. So market is punishing them. Whereas in case of Apple is solving the problems, helping people connect very efficiently, data management. There's so many new things coming in Apple, and so market is rewarding them, correct? It's rewarding them. So you need to catch the right themes. It's not the stock picking, the sector, correct? So 85% of the market value of any company today is determined by its intangible asset, not tangible assets. We Indians are used to PSU banks are very good buy because it's sitting on huge real estate, correct? You imagine Bank of Maharashtra, how much real estate it has, but the value of that share is what? 12 rupees, nothing, correct? It is, nobody's investing, no FFI is interested in those real assets. They own intangible assets. What are the intangible assets? Brand value, technology platform, what kind of platform they're using. 20 years back, if you want to open a business, any business, you need to have an office or shop in the prime location. Today, you don't require that prime location. What you require is a very good technology platform is your prime location. If you have a very good website, very good way of delivering products and service on the internet, that's your prime location. And through that prime location, you can serve the customers anywhere in the world. You don't have to be in Marine Drive or MG Road. You don't have to spend, and even when those prime physical locations give you only limited market share, only people around there, correct? But these prime technology platforms give you entire world market. So the valuation of the stocks has changed based on what kind of brand, what kind of technology platform, and what kind of data the business generates, correct? So data is the new oil of the world economy. So data which can be used for artificial intelligence. What is artificial intelligence? Software itself writes software, correct? So the computer itself generates intelligent data and writes a software. That's artificial intelligence. And what kind of human capital, what kind of talent the organization has. 85% is based on this. These are all intangible assets. And whereas the real asset, which is only 15% market cap, is different. So the companies which own more intangible assets, they are valued more. And which is very difficult for 95% to 98% people to understand that. They still feel what are tangible assets, and they want to invest in stocks like Raymond, Finolex Cables, which have real assets, correct? But those, they are not going to change the world. The companies which are going to change the world are mostly from IT, pharmaceuticals, technology, correct? And those are the sectors the investors are rewarding. And that's where there is a mismatch is there. And the themes is very important. So these thematic funds are very important. So see this slide, there is thematic perform better. So if you see, if last 10 years, most of the thematic funds which on future growth, the theme where is the future growth is very good, they have outperformed, correct? But the value investing, Warren Buffett's investing principles have not worked. They have underperformed the market. So basically, even the profitability company, economic conditions, those matter. What matters is where the future growth is there, correct? So you need when you build a portfolio, when you invest, what is the theme? The theme is the most important theme of your investment portfolio. So today, as most of you must be aware, who have been working with us, that Simplicity focuses only on thematic funds and it specializes in that. Because we thought about this in 2012 and 13, that if we were to advise people, we should focus on mega trends. We don't identify investment opportunities from bottom, identify a company, we identify a theme first. So if you're in the right sector and the right theme is there, even the worst company in that sector or theme will give you better returns than the best company in the worst sector. So you have to select the good theme. We focus on the theme. So in 2013-14, we identified a theme that India's population above 60 is going to grow up by 600% in next 20 years. So healthcare industry is going to boom in India. So from 2013 and 14, we have been investing in healthcare. So that was the mega trend we picked up. We didn't know COVID-19 is going to happen. But since 2013 and 14, we are investing, and we have made all our clients invest 10 to 15% of their corpus in those healthcare sector, and today we got rewarded. So these are the kind of themes we build, correct? Convert these mega trends into investable ideas, then try to optimize the returns and risk management by following a process. So when we identify a theme, we identify a theme for long term. Like, we are going to have a mango orchard, correct? A mango tree. So mango tree gives you fruit after 5 years. But for next 5 years, you have to keep feeding fertilizers, watering the plants, and maintaining that space, correct? So we have to keep, so that's what, and then it gives you fruits permanently. So that is a theme, we do that, correct? So that is a process we follow, and we repeat this for all the sectors whichever we identified, correct? We focus, and that's how we build portfolios. So today, now this concept is also very popular in America. So I have taken from Blacklock website. Now if you see that sectorial funds, they call thematic funds. In India, somebody calls it sectorial or thematic. That market, how fast it's growing. So it was only $500 billion a couple of years back. And today, it's expected to grow to $1.5 trillion or $2 trillion in next 5 years, 6 years. So this is the kind of, so thematic funds, you can invest through mutual funds and ETFs, but there are very few thematic fund ETFs available. In India, there are hardly any. In America, there are quite a few. And though these concepts are going to become more popular day by day, and it's just a new trend, and which we at Simplicity are focusing on that. And in that series, today I'm going to talk about the healthcare sector, correct? Healthcare is also a theme. So we picked up the healthcare sector as a core investment for every client of ours, because we identify the trend that India's population above the age of 60 is going to go up by 600% in next 20 years. So people above 60, they have a lot of cash, they need a lot of services for healthcare, and they're able to spend, correct? And they need more medicines and more health issues. So if this kind of, on that basis, we picked up that theme and we started investing. We didn't know COVID-19 was going to happen. Now, the second part of the theme was again subsidized. We saw that India spends only 2% of its GDP on healthcare, whereas in US about 18% of its GDP is spent on healthcare, correct? So that's India's share in the global pharma market is only 2%, also, and US is 42%, correct? So you see how low the percentage of spending is there. We spend only 2%, 2.5%. US spends about 18%. So we focus on that. I said, as India's economy progresses, the expenditure here is going to go multiple times up, correct? So having identified that sector, we started building corpus for all our clients. And today we have more than 25 crores in this one. Now, last year was the current year, not to last year, current year, from March onwards, those funds have given 48% 1 year return. So if you take all the sectors in India, the worst performing sector in India today is the PSU banks, minus 41, and the best performing is Pharma, second best is IT, MNC, then auto, then India consumption. Now, this all, I am assuming that even if you take a long-term story, correct? If you take a long-term story, these sectors are going to grow even for next 2-3 years, much higher than they are today, than this PSU banks or real estate or media companies. They are going to go through a lot of pain. There is a lot of pain there, your hotel industry and all this. So this is just the beginning. And now let me share some more details in this. Now, if you take from US point of view, if I look at it from US point of view, you take in last 1 year, information technology in US has given better returns than India, 40%. Healthcare has given 17% return here in US in last 1 year. In last 10 years, it has given 253%. So this is absolute 253. So if I divide 253 by 10, it's almost 25%, correct? Information technology has gone 457, whereas the overall market has given about 150% return, correct? Industrial 154% return. Energy has given negative returns last 10 years. That is oil. Oil has given minus 37% return. Financials 107. So you see, your sector selection is very important. It's very important on a long-term basis. See the gap between the two, correct? So if you're running a marathon, the gap between the guy who comes first and the guy who comes last is a couple of hours. Same way in your investment portfolio, the best sector and the worst sector over a period of 5 years, it's huge. It's huge. Now, so where we are today in the business cycle of valuation of healthcare. So this is the top end, correct? And this is so currently today we are at the bottom end of the 4 quartile, the lowest quartile we are there today. This is the business cycle and the valuation cycle. So we are in the bottom of business cycle and valuation cycle today still. We'll go from here to here, then here, and then here. So we may move like this, and this is a long 5 to 10 year story, and we should see handsome returns. So why? I'll give you the more reasons for that. Now, the rise in healthcare spending, how much we spend on healthcare? We spend negligible, very negligible, correct? So India's average age of population is 27. At 27, how much you spend on healthcare? Hardly anything. At the age of 40, a little bit more. At the age of 60, much more, correct? So currently, India's average age of population is only 27. So if you take whole India as such, our spending on healthcare is much low. But with COVID-19 and with this awareness coming up, the expenditure is going to go disproportionately higher for next 20-30 years. So this is a very long-term story, and the expenditure increase is going to be, so there are 3 parts of the expenditure: the family expenditure, expenditure incurred by insurance companies, and expenditure incurred by the government. So we will see more increase in these 2 sectors than the household sector, because the government is also going to participate more and more going forward on healthcare for the poor people, and we'll see a massive increase in at least 100% in next 5 years. So then, one second. Sorry, there is some technical hitch at my end. The current scenario in pharma industry is correct. So we have a growing aging population. We have technological advancement, correct. There is a lot of new technologies are coming. Now, telehealth services. What do I mean by telehealth services? It's not very popular in India, but it's very extremely popular in America. In US, you don't go to see a doctor unless it's absolutely necessary. You see your doctor on internet. You connect to your doctor on your laptop, and he writes a prescription for you. Unless it's absolutely necessary, you don't go to see a doctor. Now, what happens is, if you go to any clinic in India, you'll see hundreds of patients waiting there. If you go to any doctor here in America, you will never see anyone waiting there. They only take one patient at a time, and appointments are given. Otherwise, most of the appointments are done by on teleconference videos, and they encourage that. So this way, infections don't spread, correct? So this kind of stuff, more and more things are going to happen. Technology advancement, more preventive medicine is going to come. I'm going to share that with you. Awareness is going to come. And even now, as far as the Indian pharmaceutical industry is concerned, we all think that India pharma is a very big export. Yes, it's the second largest exporting industry in India after IT. But if you look at the world picture, India's exports are only $14.5 billion. China exports $15 billion. A small country like Ireland exports $40 billion. Netherlands 35, Belgium 45, Germany 85. So India is still a very small player on a global scale. India is only a large player in generic drugs and in vaccines. Only in these two medicines it's ahead, but in all other things, a country like Switzerland, $71 billion. So India has to catch up. India has a lot of things. There is a lot of scope, and India has 15% of world's population. Now, so we should have 15% minimum market share of the global medicine market, correct? No, we don't have that. Our share is much less. So you'll see that Indian pharmaceutical industry, Indian healthcare industry is going to grow in manifold times in next few years at a macro level. Now, what are the risk factors in this industry? The risk factors, there is increased competition from international players. Then this industry is more regulatory driven. There is a FDA, correct, approval in which bureaucrats come, government comes, and nobody can predict how they'll think and how they'll behave. So, and there is a geopolitics also. Every country is now, with this coronavirus, every country has understood the importance of controlling the medicine and playing politics with it, correct? So these three are the risk factors. So for the growth of the pharma industry and healthcare industry. But you have to see, currently India is in an advantageous situation here on geopolitics front, because US and China relations have got spoiled, and India is in a sweet spot today, correct? It may be there for next 5 years, but we don't know what happens after 5 years. So we have to keep a watch on that risk and see how things are playing out, correct? But today, India, everything is positive for India today. And India is the largest manufacturer of vaccines, and overnight you can't build those vaccines, correct? So healthcare trends emerging in India and around the world. As I said, telemedicine is becoming more and more popular. Mobile and wearable devices. Today, Apple Watch, correct? It's a preventive medicine. So when I was working for a US company in America, the US company used to pay 100% healthcare expenses for all its employees. So what, through insurance. So insurance premium used to cost around $8,000 per year per employee. So now what they realize that insurance companies, they are not doing charity by providing insurance cover. They are doing a business. So they charge insurance premium based on the number of claims. So what the company noticed, out of 6,500 people, that 1% of the employees, they consume 90% of the healthcare expenses. And those 90% healthcare expenses were going towards cancer, heart attack, tobacco. So what they did, the company said, if we improve the health of our employees, and that 1% of the employees, even if we are able to do 0.5%, we'll save millions of dollars on healthcare expenses. So every company in America is focused on that, and they are focusing on improving the health of the employees by doing physical exercise, providing yoga services, all kind of services at their place of work. They provide gyms, and they penalize you if you smoke. This kind of preventive medicines, correct? So that's very popular. Then artificial intelligence. So if you collect the data, and the computer can figure it out when we are going to fall. So that kind of data also artificial intelligence are playing. And now robotics is coming into picture for a lot of other surgeries. So now this kind of change is happening. Now in India, as if you look at India, though the pharmaceutical industry is much more organized and corporatized, the hospital industry is not that corporatized and not more organized. Still, we have a lot of hospitals which are run by mom and pop, single doctors. Unlike in America, there are not a single hospital which is run by a family. They are all corporate hospitals. So there is a lot of organization players and infrastructure development going to happen in India, which will further boost Indian healthcare industry. So Indian healthcare industry is still in a very infancy stage. We still have shortage of doctors. I remember in my batch, 1980s batch, my friends who went to BJ Medical College, they say that the entire class of 1980 BJ Medical College are in America, except one or two. So if 60 doctors passed in 1980 from BJ Medical College, 58 of those doctors are in America. How sad it is. So India has very few. The number of doctors in India are less. As the availability of medical profession and becomes much better, or like the expenditure on healthcare is going to go up. Now we have more increased opportunities for generic drugs, at least for next 2 years, because of this vaccine and therapeutic medicine required for this COVID-19. Indian pharma industry is full of export contracts, correct? So for next 2-3 years, visibility is very good. How Indian industry capitalizes on that is going to be the key, and where they invest those profits in further R&D and developing more is going to be very important. Now they say in America that cancer after 10 years will be cured, and we won't require doctors for cancer treatment, because gene therapy, genomics is going to fix cancer cure. That kind of research is going on in US. So that is called sequencing, correct? Gene therapy, that's going to come. Artificial intelligence, all your data. Today, how many doctors in India have digital data of their patients? In America, the entire data of all the patients is digitalized. So you can predict, correct? You can predict what's going to happen to the patients. And so this kind of investments they have made, which is very good for the future of the industry. Now in India, we see this these are the few prominent players. Now healthcare industry is not only pharmaceutical, it's hospitals, and it's also healthcare insurance companies, then other services. So healthcare industry is much more wider than just pharmaceuticals, just more for pharmaceuticals. So that entire sector is going to grow. Currently, if you invest in healthcare funds, it consists of 90% of pharmaceuticals, but over a period of time, it's going to change. It's going to change, and you will see more and more. The other thing which I've noticed in healthcare, if I compare to India versus US, in India, healthcare insurance is still unaffordable for most of the people. In America, it's very expensive, but it's mandatory, and most of the here organized labor is almost 80%, and the corporates pay healthcare insurance, and if you can't pay, the government pays your health insurance here. So and access to healthcare facilities is very easy and available here. They don't ask for money. So here, if I'm walking on a road and meet on an accident, they'll first save my life and then ask for money. In India, it's reverse, correct? First, you have to pay money and then they'll save your life. So the access to healthcare is very different in India compared to US. As I said, healthcare insurance is mandatory here. It's not at all mandatory in India. That will change over a period of time. In India, preference is towards more generic drugs. In here, it's more towards specialized drugs in US. And in India, people are still not using most of these devices. It's only in Pune, Bombay, or few cities. But in US, everyone uses Apple Watches and all those kind of modern gadgets for preventive healthcare. And there is a lot of preventive healthcare gadgets here in US. And awareness is low in India. Awareness is very high here. So we'll see it. I want to show you one small video, about 3 minutes. On this is you'll find it interesting.
Imagine a future where one day machine learning will give you the power to track your sleep. Imagine.
Excuse me, ma'am?
Yes? Can I help you?
Yeah, this already does that.
Oh, I didn't know that.
Well, now you do.
Okay, let's try this again. It's all right. I'll start again. Imagine one day a tiny device with an optical sensor will send you an alert if your heart rate is too low. Yes? What? It already does that. What? Oh, okay. Well, how about we'll send you an alert if your heart rate is too high?
It already does that.
All right, let's try something new. We'll send you an alert if you're someplace that's too loud.
I just received one of those alerts.
Really? Well, you should probably find a quieter place, sir.
You should probably mind your own business.
Okay, imagine one day in the future.
Hold on.
No. Let me finish.
1 second.
You'll be able to take an ECG.
It already does that.
It already does that.
I heard that.
Good. What about continuously track your elevation? Does it do that?
Does that.
Right, got it.
Does that.
Thank you.
Does that.
Yep, heard it the first time. Encourages you to stay fit.
Does that.
Okay, I get it. You're fit. I don't know. Will it automatically call 911 if a bear chases you off a cliff and you take a hard fall? Huh?
Yeah, already does that.
Seriously?
Yeah, seriously.
You gotta be kidding me. Okay. I got it. Let's go from the top. Imagine a day, a future. Imagine a future. One day, tiny device, blah, 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 that uses red and infrared light to measure your blood oxygen level. Yes? What? No. Don't you dare say it. I'm sorry, I can't hear you. Very cute. Well, that was fun. Imagine if...
So, the government of Singapore and Apple, they have partnered to provide this Apple Watch to every citizen in Singapore to monitor their health, preventive medicine, correct? So even if you reduce, so we did some analysis in our company here in US a couple of years back, that even if the death rate of life longevity goes up by 2 years of of the population of the people there, healthcare expenses go down per person drastically by 20%. And that is the kind of savings there. So preventive expenditure on healthcare reduces the chronic expenditure of hospitalization over a period of time. And so those kind of initiatives have been taken, and this kind of awareness and education is going to be there more everywhere. And we'll see that trend coming to India also. And Apple is playing now. Apple, we don't know whether it's a telecom company or it's a hardware company, it's a healthcare provider, because now Apple is going to take ECG, is able to take Apple Watch, takes ECG, it counts your cholesterol. I mean, it does everything, correct? All the basic needs which you want. And it's an interesting time we are going to see in next few years in this sector. Now, if you look at S&P 500, 14% weightage is given to healthcare stocks, basically pharmaceuticals and medical insurance. In India, it's only 6.74. So this also you'll see a change as Indian economy progresses. You may see this 6.74 going to 8, 9, and then eventually 12% over a period of next 5 years. So if that happens, it's a massive growth opportunity in India. So everyone should have exposure to that sector and build a portfolio. Even if I tell many times people that even if you don't have a health insurance, but if you invest for 5 years monthly through SIPs in healthcare fund, it will take care of all your medical expenses. That is the kind of returns you'll get here. Now, so I'm going to show the past performance. Of course, past performance is not guarantees future performance, but it's an indication of what can come, correct? How this sector has performed in last 5 years have been very bad for Indian stock market. Now, if you see this, there are currently 1, 2, 3, 4, 5, 6, 7, 8, 9 funds which provide 9 mutual funds which provide healthcare funds. Now, we have been investing in Nippon Pharma. Now, 10 years back, there were only 3 funds: UTI, Nippon, and SBI. For the last 10 years, they have given a compounded 13 to 16% return per annum. Then for last 5 years, they came down because in 2017-18, there was a FDI issues with pharmaceuticals. But in last 1 year, see the returns they have all provided, correct? So now, I have noticed that whenever this sectors, they go into momentum, in a year or 2 years, they provide fantastic returns of sometimes you get 100 to 200% return in a year in that kind of momentum happens. So healthcare is just now in the momentum, and at least for next 2 years, I see a very good future for that. So this should be core part of everyone's portfolio. But this is not a short-term story. This is not a stock picking. I don't recommend anyone to buy healthcare stocks because a stock may be very risky, but a sector may not be risky. So the risk gets minimized when you buy a sector. And the other thing which new trend we'll see, telemedicine. Telemedicine is very good because when you go to a doctor, there are a lot of patients there in the clinic. You may get virus from the patient there also, correct? But if you go for telemedicine, that risk is very less when you're talking to your doctor through webinar or through YouTube, correct, or whatever it is. It's very less, and only for chronic medicine, chronic surgeries or chronic things you need to go and see a doctor. So 90% of the times you don't have to visit. Now, I'll do a SWOT analysis. This is my last slide on healthcare in India, correct? What is the strength? India is a strength in generic drugs and vaccine manufacturing of the world. What is the weakness? It lacks the ecosystem to build a world-class research and development. Poor infrastructure in rural India and shortage of medical personnel in India. Threats: lack of investments in path-breaking innovation gives advantage. See, Indians, they don't invest in real R&D, core R&D, correct? That way we are lacking. We need to improve that. And opportunity, India has a aging population, and COVID-19 provides a golden opportunity. And plus US-China trade war. All these are very good opportunities for India to capitalize on it. So this is a SWOT analysis. So the story of India's healthcare industry has just begun. If every stakeholder like government, the medical profession, the pharmaceutical, they play in the right way and do the right thing, it will reward long-term investors very handsomely, very handsomely. So that is the thing, my view, a simplistic view. And most of you know that we constantly work and manage that process seamlessly. We don't try to time the market. Timing the market is very dangerous. In last 2020, many fund managers have lost their jobs because they're trying to time the market. I know one very big hedge fund manager in US here. He was managing almost $6 billion of assets, and he is giving minus 15% return because he tried to time the market and he got on the wrong side of the market. Don't try to time the market. Follow a process, follow a long-term approach. You should do very well. If you have any more questions, feel free to contact us there, and I'll open today's session for more questions and from your side. So the first question is, what would be the right time frame to book some profits in pharma sector, or restructure the excess allocation to the pharma sector and invest in some other sector? Okay, very good. Yeah, so what we have noticed at Simplicity, though we are investing about 10% in pharma sector, because of the returns, the allocation to pharma sector has become 17 to 18% of our portfolio because of the profits, because pharma sectors outperform all of the majority of the other sectors except for IT and US. Yeah, I would say the right time to book profits in pharma sector would be around February, March of 2021. This is not the time to book profits. We wait for another 6 months, see what happens on the COVID fronts, and there is going to be still 2-3 quarters, very good visibility quarters we'll see in the pharma, and then we'll take a call. Correct? Then we'll take a call. At least for next 6 months, we should stay invested, and then we can review the situation. Yeah. Then the other question I got is, as an advisor, what is the most difficult thing we faced in 2020? The most difficult thing we faced in 2020 is managing all our clients' emotions. 90% of the people whom we come in contact on day-to-day basis, they think why the markets are going up, and they try to time the market. And the more you try to time the market, they are waiting, they're trying to, we'll wait for the correction to come and then invest. And the correction comes only after market goes up 20%, 5% correction comes. So you still lost 15%, correct? So we tell clients, don't do that. Stagger your investments through STP and SIP and build a portfolio. The more you try to time the market, the more this thing it will be there. Then the other question people ask is, should we book profits and reinvest later on? That's also not a good way of doing it. Book the profits only if you need the money. When the momentum is going on, stay with the momentum, correct? And then we'll take a call. The third question I've got is, what is the impact of SEBI circular? Okay, SEBI circular of allocation of giving 25% and to mid cap and small cap, and 25% to large cap, and the rest 25 to be this. Now we have taken a call based on the experience of last 5-6 years in India. We saw that the generic funds go with the market, and they most of the times they underperform. So we took a call of investing only in thematic funds. We used to invest, and we are going to stay away with multi-cap funds or large cap, mid cap or small cap funds, because what happens is your risk gets magnified when you do this kind of. Our view is opposite. By investing in thematic funds, your risk gets reduced. By investing in large cap, multi cap or small cap, your risk gets increased, and because the sector allocation is not there, and if the fund manager takes a wrong sector, which we observed in a lot of ELSS funds, the fund managers invested in PSU banks and Tata Motors 3 years back, 4 years. Tata Motors from 400 came down to 80 rupees, correct? And all PSU banks, they're still bleeding, and they took such a big hit, even after 3-4 years, they've not been able to recover. So all these generic funds, we have taken a call that we will avoid them. And so this SEBI circular is trying to boost small cap and mid cap indirectly. Their objective is to help small cap and mid cap companies get proper valuation, and there is not much concentration on large cap. Retail investors do love small cap and mid cap. My view is we stay away from it. In the short term, there is going to be a lot of confusion. Eventually, good companies will always perform well. Bad companies will always perform bad. So whether it's small cap, mid cap, large cap, doesn't matter. Focus on the themes, focus on good, honest management, and focus on the right sectors. That will benefit. Do not try and never, I will never try to invest based on market में क्या चल रहा है, inside information क्या है. I never ask for tips, invest on rumors. I never do that. In my life, I've never done that. And I also never try to project what government will do that, because governments are bureaucrats, no, whether in India or America. You see what is happening in that TikTok and Microsoft and Oracle thing. Nobody can predict what Trump is going to do, correct? So we shouldn't ever try to play the government policy or SEBI or anyone. Invest in good businesses, invest in this, and stay away from all this noise. When you try to build your portfolio based on what SEBI is saying or what government policy is going to come, or what is going to come in the budget, your portfolio will be always for short term, and you will lose the long term focus, and the quality will deteriorate. So we avoid that. We avoid that, totally we avoid that, and build the focus. Now next question is it okay to remain invested in banking and finance? Yes. Like the pharma sector was doing very bad in 2017 and 18, and we insisted with all our clients to continue investing in pharma funds, and we didn't allow them to stop the SIPs. We spend a lot of time and effort in counseling them. See, at Simplicity, we spend a lot of time with the client in educating them why we should continue doing this, what it is, and avoid what noise is coming in the market. Just now, same way, banking sector is going through a lot of pain in India, but the private sector banks are going to do extremely well. Banking is the nervous system of any economy, correct? No economy in the world can work without money, correct? And money goes through always through banking channels and financial services. So private sector will do extremely well. And in fact, last year our bank allocation to banking sector was only 15%. This year we have increased to 20%, and in some cases even 25%. In index, the banking sector has 33% allocation, but we are giving allocation of 20 to 25% in banking, private sector banking, and it should do well. It should do well, and this is a time to build that portfolio. Oil demand is set to be back to pre-COVID level. Is energy sector good after 3 years? How it would perform? Yeah, very good question. Oil. I'll give you a classic story of oil billionaire in America. He's from Oklahoma. I forgot his name. If you do a research, the most expensive divorce. So he was the second largest, richest man in the oil industry in the world. His net worth was $20 billion in the year 2009 and 10, and he went through a divorce. So his net worth was $20 billion. So he had to give 50% of that to his ex-wife. That was $10 billion. So he had to give $10 billion of stock of his oil company to his wife. So what the gentleman did, the bankers told him, don't give the stock, take money against your loan, against your shares, and give cash to your wife. The wife readily accepted $9 or $10 billion. For her, $9 billion was a very huge amount, and she took the cash, and she said, okay, I don't want the shares. If you don't want to give me shares, it's fine. The gentleman took $10 billion loan, and today that $20 billion shares are worth only $8 billion. So he had to liquidate, and he lost everything. Now, this is a story of oil. Oil is in still bad shape, though from India is totally dependent on oil. That's why from Indian perspective, you see oil can bounce back. But if you look at US and the global, oil is never going to come back to 2018 or 19 demand level. It's never going to come back. More and more people are going towards green energy and oil efficiency. I would avoid oil sector in India. I would again I'm saying I would avoid. Again, this is a real asset, physical assets, correct? go to investments where intelligent assets are there, intangible assets are there, like pharma, IT, and a new economy. So let's invest like 21st century then rather than investing like 18th century. It's very difficult to change our mindset, correct? Because we want to go bottom fishing. I would avoid oil as of today. Yeah. Now, is Reliance only platform company in India? I wouldn't say that Reliance is still truly a platform company like Google, Microsoft, or Apple. It's trying to project itself as a platform company. India doesn't have any single platform company in India which is like on the wavelength of Alibaba, Google, Microsoft, Apple, or anywhere. We'll see how it emerges in the next few years. Reliance is still a hodgepodge, correct? It is acquired through its political clout and financial clout. It has acquired a lot of assets, and it's trying to be a trendsetter. Let's see how it goes in next 2-3 years. Then time will tell. Yeah. And with this, if any more questions are there, I've not answered them. Please feel to contact us directly. I would appreciate that, and thank you very much for attending today's seminar. And if you like our seminar and you want to know more about this kind of investment, do subscribe to our channel. Click on this bell here, and we'll appreciate that. Thank you very much. Have a nice weekend.